All right, closer. Hello, everyone. This is the panel about tokens as compensation, but because you can't understand tokens as compensation without also understanding the accounting and securities law implications as well as the tax, I thought it would be great to have these co-panelists with me here. So I'm Wendy Moore. I'm a partner at Perkins Coie. We're very honored to work with DLT blockchain companies like Factum and Dash and Ribbits. My role is to assist companies with the tax, securities, and corporate governance and employment aspects of compensation for startup companies and public companies, and most recently with blockchain companies. I learned securities laws from my mentor, Nancy Wojcik here of Cooley, who heads the blockchain practice at Cooley and is a securities law expert, having spent time with the SEC. And I'll let her introduce herself more when she speaks. But and at the end, I've got Jagruti Solanki from Aprio. I met Jagruti at the Accounting Blockchain Coalition back in May in New York during the Consensus Week, and was really struck by how uncertain the entire regulatory structure was for the accounting for crypto assets. And she had such a great way of explaining it that we became friends. So. We thought we'd talk a little bit first about the securities regulation situation that we have right now, because it's difficult to use crypto as compensation if it's going to violate the securities laws. And while the SEC would like the lawyers and the accountants to be the ones responsible for making sure everything goes smoothly, the reality is we are still waiting for guidance from the SEC and other regulators. And so Nancy, do you want to tell us a little bit about where we are?
Sure. So the reason I usually introduce myself as someone that had been at the SEC is because first of all, I do love the agency. I just happen to think it's the wrong agency that should be regulating this arena. And I'm incredibly critical of the SEC, and generally to their face. So 2017, banner year for crypto. SEC remained remarkably quiet until December 2017 when the chairman went on a PR junket and said, hey, I haven't seen a token offering that is not a security offering. And he, at that point in time, came out to Stanford and he gave another speech to that effect, pointing the fingers at the professionals in the business, saying, you all are gatekeepers and we're looking at you too. So there was a tremendous pullback by professionals in the token offering arena. We immediately started advising companies, you need to stop or else you're going to get investigated by the SEC. What the SEC really, in my view, wanted to do was just stop the market. And they've succeeded to some extent. But at the time, the chairman got an invitation from Andreessen Horowitz to come speak to Andreessen about why Andreessen so strongly believes in the token economy. And at that point in time, the chairman asked Andreessen to form a small industry group to put proposals in front of the SEC that they could consider because they were in an educational mode at that point in time. They put together a small group. It's Andreessen, Union Square Ventures, 3 law firms, Joe Grunfest from Stanford, Adam Sterling from Berkeley, and NVCA. In March of this year, we put together a safe harbor proposal talking about kind of 3 tranches of time where the securities laws could apply and that we all agreed would apply. A second tranche where it would apply in some situations, not others. And then in the third, the securities laws had no basis for intervening into this economy. We met with the commission, we met with various commissioners. We were told at that point in time, the Division of Corporation Finance, who is really the policy-making division there in this arena, that, gee, a couple years at least before they would even plan on doing anything like a safe harbor, they'd much rather consider perhaps isolated issues which we could submit in the form of no action letters. And that's where you discuss the problem, you do the analysis, and then the SEC issues a letter saying, gee, we won't refer you to enforcement. We've just recently submitted a draft to them. We're going to meet with them this week, or this coming week. I'm not incredibly hopeful that we're going to get what we've asked for, but we're going to make that effort. So what do you do? If every every token is a security, how can you comply with securities laws? Well, according to the SEC, you can do a Reg A Plus offering, and you can register the offering on a registration statement, an S1 or an F1. So some companies have done that. The SEC has not qualified yet one Reg A Plus offering. That's what they do with a Reg A Plus. They issue a qualification. Nor have they declared effective one registration statement. So these documents have been filings have been sitting with the SEC for over a year. If the policy is so damn clear, why is it taking so long for them to actually sign off on a token offering? The reason they can't sign off is, first of all, it's a complicated subject. That's only one aspect of it. So if everything's a security, well, then you have to trade on a securities exchange. There's no securities exchange that will actually trade a securities token. The last national securities exchange that we were involved in took 4.5 years to get approved by the SEC. That's not a timing that I think the crypto community can live with. So the community is dealing with it in another way. You become a registered broker-dealer, a firm becomes a registered broker-dealer, and they have an alternative trading system. The problem with that right now is the SEC is close to approving. It's really FINRA that will do the actual approval, but it's FINRA in the SEC that will actually allow this trading to occur. But there are complicated issues there because, again, they bring in their little box of 80 years of experience in the securities arena, and they say, unless you fit in this box, and one of the boxes is you need a transfer agent, and oh, by the way, trades take T+2. Well, what cryptocurrency trades trading day plus 2 days? Yeah, not going to happen. So, there are issues that need to be worked out. Cooley, which is the law firm I'm a partner at, we've not done one Reg A Plus offering because we just don't think that's going to work, because at some point in time, once you have more than 2,000 accredited holders of your token or 300 unaccredited holders of your token, you're a public company. And you're going to have to start filing annual reports with the SEC. You need audited financial statement, quarterly reports. So
that's a really expensive proposition. I mean, we did a lot of IPOs together when I was at Cooley, and this is like $1 million proposition plus annual reporting fees, right? This is not decentralization.
$1.5 million to $2 million to become a public company, and an average cost of $2 million a year to comply with all the reporting obligations. So right now we're in a regulatory quagmire, and I'm only talking SEC. We have 50 states, all of whom are exerting some level of involvement in this arena. And that's only one agency. We have the Commodity Trading Commission, we have the Department of Treasury, we have the Federal Trade Commission, we have the IRS. So right now, kind of a mess.
Yeah, no, I totally agree with everything that you said. Now, SEC is so behind in coming up with some sort of concrete guidelines for what companies should be doing, utility versus security, what filings they should consider. From a tax and accounting side, which is where I come from, we are very much in a similar position, or probably worse when it comes to just accounting. Like IRS today has at least come out with maybe a couple guidelines on, okay, tokens or cryptocurrency, they are property, some sort of guidance on token compensation type of model. That's what we would use to follow, to kind of comply with taxes. But from an accounting standpoint, which is the US, which US GAAP is what you would use for financial statements if you want to be in compliance with the accounting standards here in the US, AICP or FASB have not really come out with anything yet. Like it's kind of unfortunately silent. We are working very closely with them in coming up with some sort of standards on how do you account for these crypto transactions, digital assets. Do you fair value them and then record those on your balance sheet, or do you treat them as an intangible asset, and in which case you would record that at cost basis? And anytime there's a permanent decrease in the value of that asset, you then record impairment expense. So it's like two approaches, and at this point, it's definitely one of the two. Which one, we do not know. We, as a firm, we look at companies and the cryptocurrency model, the token model, and the digital assets that are holding it for pretty closely, and kind of recommend one of the approaches. But just think about it. If you have to record these digital assets on your balance sheet, which it is an asset in one form, question is, how do you value them, right? If it's Bitcoin or Ether or one of the top 10 cryptocurrency, they are on exchanges, you can probably take average of couple exchanges and use that as a fair value to markup, which is okay. But if it's a thinly traded token, now you get into a whole different aspect of valuing something that's maybe pre-ICO, which is a bigger issue. Like, what metrics do you use to value those, right? Like, there's not a whole lot of market determinants out there. And the company, if it's a startup company who just created the tokens, it's a whole different dynamic on what assumptions do you use to value these tokens. And the company doesn't even have, if it's a startup company, there's not a whole lot of projections that can be built on. In fact, for most of these ICOs, you have a white paper, there's a promise that these tokens will be used for access to platform or some utility down the line. And that could change. Like, once the token is out and as the company is building their platform, it could change 6 months later, oops, this is not what we plan to do. Now we're going to change our trajectory. So all these concerns, all of this makes it even more difficult for companies to do evaluation. That's one of the aspects. If you treat these digital assets as an intangible asset, in which case the guidance that says that you record this at cost basis, then you are required to record something called an impairment expense. And that's a hit in your expense. It's a P&L charge. We don't completely agree with it. Personally, I'm not a big fan of recording digital assets as an intangible asset. I mean, it's like, how you have to track anytime there's a decrease in value of the token or the cryptocurrency, you have a P&L hit, and then you never pick up an increase in the value. Do you have a question? Sorry.
Well, I've been waiting. Just want to listen to the whole thing. But the real question is, I think what everybody's going to ask is, when is the government going to catch up to the technology at this current state of crypto? I think that's the real question everybody's asking.
So Nancy, maybe you can talk a little bit. I mean, the key to the tax and the accounting really is understanding what we've got. And is it a security like the chairman says, or is it an asset or a commodity that's wrapped up in a security? And I have to say that this is one of the things that I don't think is well understood when they're talking about what is a security. And you may have heard about the Howey test and oranges, and it really does require you to go back and think, what is the underlying asset? Because I'm sure for your perspective, Jagruti, how you account for it depends on whether it's a security, a fiat currency, or a utility commodity. It certainly affects my analysis from a tax perspective. So Nancy, where do you think we're going to end up with tokens being securities versus the contract to buy the token being the security?
Well, we think the contract buying the security pre-public token sale is a security. You know, we've all taken, or I think all
yes,
three of us.
we are with
yeah,
you.
Yeah. So we advocated the SAFT project. I think it's pretty much universally used, whether you call it a SAFT or a purchase agreement. By the way, the SEC had a problem with the SAFT. And I said, okay, we'll just call it a purchase agreement. Blood pressure went down in the room. Utility token, they don't like that term. I said, okay, we won't use that term. Let's use a different term. And it's just, you know, we're fighting fights that don't make any sense. When do I think the SEC is actually going to come out with any direction?
You can't make a blanket statement. The government is wide and broad, and you're not just dealing with state government. You're dealing with federal, state, and international.
Yeah, so a couple things.
I think we're good. Nancy, why don't you continue?
Well, let him restate his question or comment.
I'm just saying that I just want to know your opinions. It's just your own personal bias. I mean, I'm just really curious what each perspective have. I think that will give a lot of value to the panel.
So first, I'm going to address the SEC. I'll address Congress. The other agencies are kind of holding back, okay? So first, the SEC, it's going to be years. And what I think is happening, they have, I believe, about 80 investigations pending. And everybody keeps telling me, and people who are really credible, that, oh, the SEC is only looking at the fraud cases. They're not. They're looking at companies who issued tokens, their network, and that token can be used in that network, you know, somehow, and they're investigating them. I think until the SEC loses a couple of cases, that they're not going to do anything until they figure out how the courts are going to go. I have some optimism for the SEC. I think we have 2 new commissioners that are much more open-minded. We have a third swing vote. When we met with him in March, he was very much a supporter of crypto. You know, 3 weeks later, after I imagine conversations with the chairman, suddenly he's saying crypto is, you know, everything's a security. So I think he'll be a swing vote on some of these enforcement cases that will be coming up in the next, I don't know, 90 days. So we'll see. Congress, it's kind of interesting. It's by party now. Democrats hate crypto. Everything's a fraud. Maxine Waters in California, you know, oh, you know, the drug dealers, the gun runners, evidently they can't use USD, they can only use crypto, so.
Is that why we only started having a drug and gun problem in the last 8 years?
Evidently. Republicans have, you know, an open mind. There's legislation that we're trying to, and I know that's kind of, so, but, you know, there may be some legislation introduced. I'm not hopeful that it will get enacted, but I think if we could sell our president like space troops, you know, troopers, we need a sexy name. I bet we could sell it.
Blockchain enabled.
Hey, you know, something. So, you know, once we see more and more of this going on and people talking about it more, getting much more mainstream, again, we're all kind of talking amongst ourselves all the time. So, you know, we're very much committed. But, you know, I talk to my family and it's like, what? You know, I talk to my partner. So I have about 200 partners. I had to make a presentation a week and a half ago. And, you know, you just see their eyes roll back, you know, they just don't get it. So, and it takes a little time to get it. The CFTC, much more open-minded, although they've been making some speeches lately that are a little troubling. The IRS just wants revenue. FTC taking a back seat. The Fed doesn't believe this is a big enough market that they should be concerned about yet. So, you know, I think, yeah, exactly. So, my view.
No, I mean, that's from regulation standpoint. From a tax aspect, IRS, I personally think they are already on it. They are not where they want to be, but I think their regulations might come out faster. Like they're already working with Coinbase and other exchanges to kind of get the information they need. Well, obviously they need their money. Everyone is doing crypto transactions, so yes, that's why they have all the benefit to, motivation to get it done sooner. From an accounting standpoint, which is FASB is a regulating body, I think we are just waiting for SEC and everyone else to come out with something, and then, because accounting somewhat kind of will depend on, security versus utility, if it's okay to say that, to some extent.
How do you get audited financial statements to file with the SEC if we buy into, hey, everything's a security, when we don't know the accounting side of it?
No, it's a very good question, and that's one of the biggest challenge. When it comes to auditing a company, we as auditors, we are hesitant because I don't know if that token is going to comply. I mean, does that need to be security per SEC, or does that need to be just non-security, which is a utility, in which case the disclosures will differ in what goes in your financial statement. So I feel like it's it's like we are waiting on each other. It's like you go first, our report is going to depend on whatever SEC comes back and says that utility versus security, and it's kind of vice versa. It's a very unfortunate situation of wait game.
Are you issuing any opinions?
For non-token company, yes. We have been doing that 5 years. Like we worked with BitPay for several years, and kind of make sure. So yeah, we have been doing that for non-token companies. For token companies, we are assisting with getting ready for an audit, like preparing them to the point that one fine day when you know that this is the regulations, this is how you have to present your audited statements, you are there. Like there's no need to kind of go back and clean up your records in order to be in compliance. So at this point, not issuing audit reports for tokens.
Wait a minute. Oh, you're all set. So, having been a public company lawyer for a long time, we know that's not quite right? Okay. So, there's a fresh look. Let's say it's a year from now, you need to do a fresh look, even from, what you've, in effect, audited before. So KPMG, I'm aware of, has actually audited a token company. Haven't seen the audit opinion yet, but I believe it's forthcoming. But you're right, very few firms are actually doing it, and it presents a real problem.
And I'll add to that, there's a lot more, and we are working with a company, I cannot disclose the name. If it's something to do with ICO, that's where we are, kind of not there in terms of issuing audits yet. But if it's a pure token company, could be SAFT, safety, whatever, that we are all in, we are already working on that. The audit procedures for anything that has digital assets is much different than a regular standard audit. It requires a lot more procedures. The biggest issue is verification of digital assets, confirming ownership. How do I know the company is saying what you have? Like the way we look at it, blockchain is like a third ledger that's sitting outside. And now you have your accounting system like NetSuite or whatever the systems they're using. They're not talking to each other. And that's where we get into an issue where we as auditors, I don't know if my population is complete. And that's why it takes much longer to kind of get through an audit of something that has digital assets on blockchain.
So, I mean, I think that brings up a good point, which is the need for additional solutions to help the auditors, the lawyers, the IRS be able to track the crypto. And while it's on a blockchain, part of the wonder of the blockchain and a lot of the push on these securities is trying to find anonymity, right? That's part of our privacy, taking back our digital identity. What are the solutions that you're actually seeing? I know you and I both work with a client who is helping you with as a service.
Yeah.
Tracking, making sure where the assets are.
Yeah, so today we have looked at probably 6 or 7 softwares. All of them have their own unique features, and I can name them. Verity is one of them. We have worked with them for almost 5 years now to help with blockchain assurance, audit procedures in terms of working with them to develop tools that can help us gain comfort on existence of these assets in multiple wallets, whatever form of wallet the company is using. There's other company called Balance3, there is coin tracking, there is blocks, and then a couple others that I'm missing the name. But I'll be honest, the softwares, all of them are great, but they are still developing. Their roadmap is much longer than where they are now. And not all of them can get us what we need, and it's changing. And to be honest, like forks didn't even exist, or at least I didn't know about it until like 18 months back. Now the software needs to be designed in a way that it can capture these forks. Airdrops, the software needs to be capable to be capturing all the airdrops. So our needs are increasing, because of which we are kind of going back to these software companies, and now here's a new reporting requirement, help us track this. So it's kind of it's a learning curve for all of us, kind of working together, and us telling them what we need, they telling us what we are looking for, and we are kind of growing together.
Maybe we should take a question, because I know we're half hour into the session and we do want it to be a little interactive. So do you have a question?
Thank you so much. My question is, a lot of the various blockchain companies feel maybe that they're trying to sidestep some of the regulation or some of this like quagmire by registering in island nations or overseas or possibly Malta. How much of that, like where's the water's edge?
By the way, Malta's not magic. It's not like a kingdom of unicorns and rainbows where none of the laws of the world apply.
Well, that's kind of what I want to understand is like, where's the water's edge, like, right?
There is no water's edge. It's a global digital economy.
Well, so you have a Malta company, but your entire nexus is here in the United States. I mean, the SEC or the IRS can basically step in and pierce that corporate veil completely.
Yes, and I will say something that part of why I wanted a panel of professionals up here is you need to have qualified professionals advising you on the accounting, securities, tax. If you're not working with a reputable accounting firm, law firm, tax auditing firm, and this needs to happen early. And I realize that's not what you want to hear, right? Because you need to pre-sell to have money to pay the specialists. Right. The problem is there are things you do in the pre-sale process that completely blow your ability to do what you want later on. And so it's an ongoing, level as you go, build the relationship. And that has to do with starting the corporate structure. I spend 3 or 4 hours whiteboarding with the Deloittes and the other tax planning firms, trying to make sure that when that IP is being dropped out of the US and crossing into Cayman, Bermuda, Malta, Isle of Man, that it is being done in a way that is going to be respected as a sale between the corporate entities and not give rise to a perpetual royalty from that foreign tax haven country's sub back up to the parent, because I assure you that's going to destroy all the tax savings that you thought you got by minting the tokens in Cayman. And that's not something you can back into once that IP has value. You need to have that tax planning before you create value in that IP. Similarly, if you're pre-selling, and this is where it really impacts my compensation side of things, is if you're putting out SAFs that say that my 8th graders can back into a price per token, because you're just pulling that out of your hat, you want to go public, you want to do your ICO at $1 a token, and therefore you're going to give people a 75% discount in that pre-sale, you've just pegged that non-existent token at 25 cents. There's only so much that a third-party valuation firm like Technos can do when you've put on paper in a pre-sale that a third-party arm's length is willing to buy your token at 25 cents. I can't get your founders, your advisors, your employees tokens at 4 zeros to the right of the decimal when you've got that pre-sale document out there. It is worth the money to make sure that the rest of the financial situation flows properly. Nancy, I jumped in front.
No. I agree 100%. We spend a lot of time talking about employment issues and how these individuals can get tokens at a cheaper price. So, absolutely.
And by the way, calling them contractors doesn't help.
Especially in California.
Especially in California. Question.
So I'd kind of like to get you back to where you're going now. You're getting paid in tokens. So my company's publicly held, Digital 10, and we had a lot of tokens. We were probably over $1 million of tokens, recently, and we reported that, and we had a long discussion with the SEC, which wasn't fun. So I'm wondering, because I'm going to make the problem worse, we're enabling small businesses to do transactions with tokens. And so not just for I can pay for audits and I can deal with the SEC. These small businesses can't. So I want to hear your thoughts on the topic is getting paid in tokens, getting paid in tokenized securities.
You mean the professionals or you mean the employees?
The people, like say, if I am a massage therapist and I'm going to get paid in a fractional Bitcoin, what do I do? I'm a publicly held company. I'm escrowing those things. I have a similar problem, but these little guys are going to have a harder time dealing with that.
You mean if and when crypto assets become a regular form?
It's already begun.
Although I think I've seen survey results that something like only 1% to 2% of crypto transactions are actually used in day-to-day commerce.
Right, I know.
So it's begun.
It's begun. No, the technology doesn't exist. We're rolling out here in Austin as an example. We've got about 1,000 businesses signed up. We've got about 4,000 people. So we're just starting.
Right.
But, it's happening. And so how are they going to handle the accounting of that?
It's income, whether it's property, security, or cash, they're going to have to take that amount into their income. And to the extent they are a 1099 contractor, there's W-9s or W-8s that have to be filed. It's not magic. It's the same thing as if I paid you in gift cards. I can pay my massage therapist in gift cards. She's still got to report that, and I still,
Yeah, but where do you put that on your tax form?
It's there. It's not brand new. That isn't the development that we're having to deal with.
Sure.
One of the biggest developments in the compensation space we're having to deal with is the expectation that employees, founders, board members, advisors who are getting these allocations before an ICO, that's not a tax event. That doesn't get your basis.
Right.
That doesn't start your long-term capital gain. And for that, you are going to need accountants and lawyers to make sure that you are navigating in the very narrow space that we've been able to create to try to get you a positive tax result. And let me take a step back and say what that is. When a third-party investor is buying your crypto as part of a pre-sale, and they enter into a PITSA, not a SAFT because it's not simple, as Bill Hidman likes to say, you open that transaction, you pay the fair market value of those tokens on that day as an investor. When the ICO happens, that's not a tax event when you receive those tokens. It's only a tax event when you finally sell or use those tokens. For the investor, that's a great deal, right? You're buying those tokens at 4 zeros to the right of the decimal, and hopefully even if you're selling them at 10 cents, that's quite a material profit. When you have a service provider, you are under Section 83. You don't get that prepaid forward tax treatment that your investors are getting. And everyone wants to say, well, I'm buying this as an investor. No, you're the founder. The IRS, it's just very unlikely they're going to respect that the founder is an investor in his own business in the way that you guys want it to work for tax purposes. And so then the issue is, how do we have a transfer of property when a non-existent token isn't property, right? You haven't even coded this thing yet. Or maybe you've coded it, but it's still out in the ether, you haven't launched it. Merely allocating a right to receive 5% of the tokens that eventually get minted, that's not going to do you any good from a tax perspective.
So the other thing you need to consider as a business, whether or not you're a money services business, I assume you're looking into that. Secondly, you have AML, KYC issues, so just make sure you cover those.
Yeah, both true.
Question?
So I've been in the industry since 2012, and one of the things which you actually just touched on with money service businesses is, going back to 2014, my particular company, one of the projects I was affiliated with, there's been many, we developed a fully functioning exchange, crypto to crypto, right? And at the time, everybody seemed to be worried about FinCEN, but I haven't really heard anything about FinCEN in the last 12 months. It seems to be all SEC, CFTC, et cetera. So I would imagine that the previous stuff FinCEN has done, how is that being applied to tokens? Because I would love to get your perspective on this, because it seems to be something nobody's really talking about with the money services and money transmitter issue.
So it's an issue we grapple with constantly, and FinCEN, you're right, has not been very vocal lately. Who's been vocal on the subject is the SEC on their investigations. They are examining whether or not companies have in fact gone through those processes. And we have analysis done each time whether or not something's a money services business, which then lends credence to the states that have money transmitter laws. You know, you need to examine it for each company you're involved in that's involved in, you know, similar to whoever it was that was standing about their new business paying in crypto. So I just don't think the regulator itself is talking, but people are pursuing it.
I will say we represent about a half dozen exchanges. The government's looking at this for the exchanges, and they're starting to come to the point of asking, wait a minute, you are supposed to be, you're not a broker-dealer, you're not an ATS, you don't have the ability to trade securities. Please identify which of your coins that are on your exchange are securities and which are utilities. Give us an opinion. I assure you they're looking.
So they're having these conversations privately, though they haven't publicly announced anything. So I imagine there'll probably be a few enforcement cases coming down the line.
If you haven't gotten an information request, you should probably expect one.
So what I believe the I don't want to put it on tape. I'll tell you guys what I believe the SEC is doing right now and how it will impact companies that did a token offering in 2017, 2018, so.
Man, you booked back there to the questions.
Yeah, 'cause-
And we're out of time, and I don't
Okay.
want to upset the gentleman in the back. Can we take another question? All right.
So thank you again for kind of clearing all this stuff up. It's really informing.
Yeah, we've totally cleared all the cobwebs
Well,
out.
because we don't know this stuff, you know, we just don't know. Can you tell us a little bit about like what happens to all these blockchain projects like Stellar, Digibyte, like that are all foundations, you know, decentralized? Like what happens to that, or even a decentralized exchange like what they're building out in San Francisco with Stellar X?
In terms of foundations, do you mean like the tax magic associated with being a foundation?
Yeah, but do those become like securities as well, or are those cryptocurrencies?
Again, it goes to, are you fully functional or decentralized? You go through the same analysis. People thought that, hey, you know, we'll have the issuing company, we'll form a foundation, and the problem is nobody wanted to actually give the foundation the independence that it needed. They wanted to control it.
And from a tax perspective, to have a good nonprofit, you do need to be giving up control.
Exactly.
And so even though Ethereum is a foundation, it's not a foundation in the same way that, say, Sovereign is.
So the SEC, on an investigation that we're defending, the SEC views that as one entity. And if there's enforcement action taken, they're going to go after both of them.
Yeah,
So-
I'll also say that people seem to think, well, as long as there's a foundation involved, one, your open source developers will be more likely to contribute, and two, it's tax magic. There's a lot of trade-offs associated with being a bona fide non-tax entity, and you really need to understand all of those, not the least of which is the compensatory aspect you're probably going to be pretty unhappy with.
You know, if your long-term goal is to move it to a foundation, make it your long-term goal, develop your company, get fully functional or decentralized, move it over to the foundation down the line, and rather than dealing with, you know, these two entities, you know, look at what happened with Tezos. Nobody fully thought out what they were doing and, you know, presented issues, and it became very public, so, and a lot of lawsuits around it. The final thing I'll point out to you all, we're talking regulatory. To me, the biggest threat to this industry is third-party plaintiffs. The Ripple case is something that, you know, you really have to watch. I mean, the lead plaintiff in that bought $2,000 worth of the tokens, held it for 10 days, and had a $200 loss. And he's the lead plaintiff on a multi-billion-dollar class action. And if that case is successful, I mean, it is the death knell to many, many token companies.
But that's no different from being a publicly traded company where you can own a single share of stock and still be the lead plaintiff.
Agreed, agreed.
But I think the thing that's different about being a publicly traded company where someone buys a share of stock and someone buys a token that has not yet been determined to be a security or a fiat or a utility token, The plaintiffs' firms are figuring this out. They're moving from strike litigation in the merger and acquisition scenario to this, because this is an open field and they are begging for the courts to legislate. So if this is another reason you really do need you do need tax, securities, and accounting advice on the front end, unless you want to be dealing with the Levi Korzinskis of the world, who have nothing to gain, nothing to lose and everything to gain by filing these suits.
And I will tell you, if you are investigated by the SEC, since I've been quoted on this so much, I borrowed this expression from somebody else in the public company arena. It's like being in hell without dying, and it is. You will be papered to death. You're talking $100,000 a month in legal fees and just complying with their requests for documents. And then once, if they decide, if they get the SEC to actually sign off on an enforcement action, you go through it again. What they try to do is force you into a settlement, and that's what we're seeing right now. They really want settlements, which I oppose. I know how costly it is to do this, but for the community, we've got to fight them, or else, we're going to see a very, very cumbersome community, and maybe even just offshore, which makes it hard for networks that people want in North America. Canada's looking at us, so they've stopped everything too. It's hard.
Jagruti, do you want to share any final thoughts? We're about 10 minutes.
No, I think, as Wendy mentioned, just do your professional due diligence, hire the right kind of advisors, tax, accounting, lawyers, before you even set up a company to begin with. Just because international jurisdictions, some of them are friendly for tax purposes, doesn't mean that that's the best way to go. It could be different. So just, do your due diligence.
Nancy?
So we are seeing a move to doing equity deals with a token component to provide you, the ability to build out your network. We're looking at more test nets before you go mainnet, and if you can establish decentralization early, you have a much better case with the SEC. I'm not saying that you won't get investigated, but there are better pickings than, a company that actually is decentralized, whatever that means. Again, we all have our own views of that.
That's an interesting, sorry. So my last point will be about decentralization, which is, it's not just about having your token or your coin widely held. That is not necessarily decentralization. It has to do with how much control the issuer of that token has in the development of the platform and the technology. And if that token that's out there in the market really still relies on the efforts of the issuer to have that token be a success or not, that still lands you squarely, one would imagine, within the Howey test. And so don't just think that because your coin is widely traded or you airdrop it across the world that you have achieved decentralization. It's not. There's many ways to think about decentralization, and that's not necessarily the right one.
What's interesting is I don't think Ether is decentralized. I think it's fully functional, but I don't think it's decentralized. But the chairman, the division director said it's decentralized. So, hey, look at the metrics for Ether. And hey, you do a little better than that, hey.
Then why isn't Ripple?
Yeah, and I wonder if they would have said that 3 years back. I mean, now they came back and said Ether is not, it's not a security, but, it's now. How about 3 years back? Would they have the same answer?
There's no question. Ethereum violated the law in the SEC's view when it issued its tokens. He said that in the speech, even though consensus says, oh, no, that's not what he said. That's what he said. But then he said, look, the securities laws really, it doesn't add anything now because Ether is decentralized. Again, not. Yeah, exactly. So it's a long process.
Basically, just keep your nose clean. Don't do anything you wouldn't want the SEC, the IRS, FASB to know that you did. I mean, really part of, I think, getting good regulations out of FinCEN and CFTC and IRS is about our role as members of the community, your role as members of the community in putting forward the best process for doing these offerings and running your business. The more tomahawk coins we have, the harder this is going to be for everyone else. So we appreciate your time here sitting to listen to a bunch of lawyers and accountants, but this is what's going to help this industry move forward, is making sure that we've all got our nose clean and no one can be coming back to us and saying that we're all sponsoring fraud and Ponzi schemes. So thank you for being interested in the regulatory landscape.